Good morning. Let's get started with an exercise in which we're going to look at accounts receivable and how we do the adjusting entries at the end of each year. So I shall start with a quick screen share over here. And let's get rolling over here. So we have the following events that occur for the Underwood Corporation during their 2021 and 2022 year, their first 2 years of operation. So they've given us a bunch of transactions over here. Let's look at what is required. First, we're told that we need to record everything in the journal. So I have my journal set up over here. And then they've asked us to post the transactions into cash, accounts receivable, and allowance for uncollectible accounts. So they're just interested in those three accounts. And then they want us to calculate the net accounts receivable at the end of 2021 and 2022. So let's get started one step at a time. So I have my journal set up over here. For the 2 years, I have the T accounts for accounts receivable, allowance for doubtful account or uncollectible accounts, and cash. That's for both the years. And I'm just going to look at the partial balance sheet. I'm interested only in accounts receivable. So we'll get to that at the very end of each year. So on June 12th, 2021, they told us that we provide services to customers on account for $41,000. On account means it's a credit transaction. So let me start out with my date over here. On June 12, 2021, I provided services on account. I provided services, which means I can credit my sales. I have not collected cash as yet, so it's going to be accounts receivable debit, and I will credit my service revenue, and that dollar amount is $41,000. Now, as soon as I do this, since I'm looking at only these three accounts, I'm not doing the T account, posting it to service account. I just have this one. So I go ahead and transfer the number into my T account, accounts receivable. So this is 41,000 that I have over here. I've posted it into my ledger or my T account. The next date is September 17th. I received $25,000 from the customer on account. So the $41,000 sale that I made, I've collected some of the cash. That's always good news. So on September 17th, I have cash coming in, so cash is debit. I now no longer have that accounts receivable in my books, but it's only 25,000. I still have the rest remaining with me, 25,000. So in this case, cash debit, I'll put that number over here, cash debit. Accounts receivable credit. So that goes on the credit side of the accounts receivable T account. On December 31st, they've told us that we estimate 45% of the accounts receivable at the end of the year will not be received. So we're making a dire prediction over here. So I have 41,000 that I made credit sales. I collected 25, and they're saying the balance 45% is not going to be collected. I need to do an adjusting journal entry for that. So let's take a look at what I will do over here. The first thing I will do is I need to find out how much I have remaining in accounts receivable. So 41 minus 25, my balance is 16,000. So I'd set up this partial balance sheet, and that's the accounts receivable. And that number is 16,000. So the number that I had over here, I'm going to highlight it in a different color so we can see where these numbers are flowing through. This is the number I have in my balance sheet, but I'm saying of this, I don't expect to collect 45%. It's a very high number, but that's what we've said. 45% is not going to be collected. 45% of ending accounts receivable. So on that number, I need to plan for. So 45% of 16,000 is 7,200. This is going to leave me with, in the balance sheet, net receivables of 8,800. That's what I'm confident of collecting. Now, I cannot have something come into my balance sheet without doing a journal entry. So let's work backwards and see what I need to do. For cash, there was just one entry, so that's 25,000. I'm just finishing up that one. Let's take a look over here. In the allowance for doubtful account, in this account, there was nothing over here. I need to have 7,200. I need that number over here, 7,200. That's the balance I want over there in that account. Okay, the 7,200. So what I need to do is a journal entry. Bad debt expense debit. allowance for doubtful accounts credit, and that's going to be 7,200, and that is going to be the balance in my account. So it's just this number. This is what I have, 7,200. Okay. My apologies. Let me take this out over here for a quick second. Okay. So I have bad debt expense debit, allowance for doubtful account credit, 7,200. That's when it's posted, we have that number over here. That's the only number over here. So I'm drawing the double underline to indicate that's the balance. Okay. So once again, let me walk you through this. I had two transactions with the party, outside party, my customer. I made a sale for 41,000. They paid me 25 off the 16,000 balance. I am saying at the end of the year, I think I will not collect 45%. I need to do an adjusting entry to reflect that. So I first close my accounts receivable account. This tells me what my balance is, 16,000. That's a number I brought in over here. I said 45% of that is not going to be collected. So that number needs to be in my allowance for doubtful account. So working backwards over here, I set up my journal entry and say that bad debt expense debit, allowance for doubtful account credit should be for 7,200. So we always go from the journal to the ledger to the balance sheet. In this case, we work backwards because we needed this accounts receivable number and we had to find out what we were going to do over here. Let's see how this is going to play out in the second year. Now, accounts receivable, allowance for doubtful account, and cash, these are all your permanent accounts. They are the balance sheet accounts. They carry over into the next year. So the 16,000 that I had over here comes into the next year, 16,000. That's the same 16,000 I'm bringing down over here. I had 7,200 over here, ending balance, I bring that down. Cash, I had 25,000. So I bring that as the beginning balance over here. Now let's see what happens in the second year of operations. On March 4th, we provided services to customers again on account for 56,000. This is fairly easy. We know how to do this journal entry. It's very similar to this one. It's accounts receivable debit and service revenue credit. And the dollar amount is 56,000. So 56,000. So accounts receivable on the debit side, we have 56,000. And service revenue is credit. We don't have a T account for that, so let's not worry. Moving on to May 20th, we collected $10,000 from customers for whom we provided services in 2021. So again, this journal entry is cash debit, accounts receivable credit, and the amount we collected is $10,000. So cash on the debit side, I'm going to put $10,000. Accounts receivable on the credit side, I need to put $10,000. So cash debit 10,000, accounts receivable credit 10,000. I've posted into my two relevant T accounts over here. Then they tell me on July 2nd, we wrote off the remaining amounts owed from customers in 2021. Okay, so my customers who owed me money in 2021, okay, remember there was 16,000 outstanding. Of the 16,000, I collected 10,000 because they told me very specifically, received 10,000 from customers for services provided in 2021. So how much is still outstanding? 6,000. So the 6,000 that's outstanding, I need to take it off my books. I'm taking the accounts receivable off my books, and that number is going to be 6,000. Again, last year, at the end of the year, 16,000 was outstanding. On May 5th, on May 20th, I collected 10, which means 6,000 is still remaining. On July 2nd, we are saying they're not going to pay me. I need to take that off my books. So the minute I take accounts receivable off my books, the 6,000, I need to take allowance for doubtful accounts off the book, because remember, this is a contra asset account. It exists only in relationship with the asset. The minute I take the asset off my books, I need to take the allowance for doubtful account also off my books. So I've taken those off my books. I am not going to recognize an expense or a loss now. because I had already planned for this. In fact, I thought 7,200 was going to go bad. So I guess I'm better off with 6,000. Still bad, but not as bad as I thought it would be. So let's see what we need to do over here. We will post the $6,000 allowance for doubtful account on the debit side and accounts receivable on the credit side, $6,000. Moving on October 19th, we received $45,000 from customers to whom we provided services in 2022. My journal entry is cash debit and accounts receivable credit. And they've told me the amount I received is $45,000. So cash on the debit side, I will put the $45,000. Accounts receivable on the credit side, I'll put $45,000. Okay. Then finally on December 31st, 2022, this is the end of the second year, they again say, whatever accounts receivable is there at the end of the year, 45% I'm not likely to get. So again, they're giving me this expectation that 45% of the accounts receivable will not be collected. So now we got to go through the same process of what we had done before. Start out with how much do I have in accounts receivable? Okay, so I need to find out what the balance is. For that, I need to close the accounts receivable account. I have multiple entries on the debit and credit side. So the first step is add up the numbers on both sides. The total debit is 72. The total credit is 61, which means my balance is 11,000. Again, I'll put this in a different color so we can see. I'm going to keep track of my colors here. We can see where I got this number from, 11,000. Okay. Now I'm saying what I need to plan for is my allowance for doubtful account should be 45% of this 11,000. And my net receivables, therefore, will be 6,050. So let me first worry about this number. This number should be 4,950. That's what I want my allowance for doubtful account ending balance to be. So I know what the ending balance should be. Okay, so that's a number, that's where I'm getting that number from. Now I have some numbers in over here. So what do I do over here? So before I do the journal entry on December 31st, I need to figure out what numbers are going to go in over here. Okay, so I have 7,200 credit from last year. This number came from last year. 6,000 is the number I wrote off. So I took this off over here. So let me first do a subtotal over here. That's all it is. This number is a subtotal. This subtotal. So let me write I'm just going to put I'm going to write ST to let you know that this is a subtotal. So you know that what that number is, the 1,200. It's a subtotal over here. Now I have 1,200. I want my ending balance to be 4,950. So my adjusting entry needs to be only for the difference. Okay, so my adjusting entry should be for 3,750 in order to bring the balance up to 4,950. Again, where did I get that number from? From here. I said of this receivables, 45% is going to likely go bad. So that's what I came up with this number. I'm saying I have 1,200 in this account. That was a subtotal I calculated. Therefore, the journal entry needs to be only for 3,700. So when I do my final journal entry over here, it should be for 3,700. So again, this is a unique case in which I work from the balance sheet to the T account or the ledger and back to my journal entry. This adjusting entry, I have to do it only after I can get these numbers in place. So they asked us to record the journal entries. We've done all of that. They asked us to post into the cash, accounts receivable, and allowance for uncollectible or doubtful accounts. We've done that. Let me do the cash total over here. We have cash total of 80,000, assuming there have been obviously no other transactions. And then finally, they asked you to calculate the net accounts receivable at the end of 21 and 22. And we have those numbers, 8,800 and 6,050. So hopefully at this point, you have a good understanding of how we deal with receivables. Always read the problem very carefully and see what's being asked and what information has been presented.